And good morning or good evening, depending on what part of the world you're in. Ed Tlaskis here, Random Walk Trading. It's Wednesday, May 24th. Getting ready for the big Memorial Day weekend. Got a car show on Saturday, getting the car fired up and cleaned up and all that fun stuff. So we had about 3 days of rain here, so hopefully the rain will let up. But hope you guys got everything lined up for a good Memorial Day. Let's go ahead and get our disclaimer out of the way. And as you know, Random Walk is not a broker-dealer nor investment advisor. This presentation is for educational purposes only. We don't know your situation and what level of risk is right for you, as we're not making any specific trade recommendations. The risk of loss in trading options can be substantial, so please be careful before placing any trades in your brokerage platform. Actual P&L can vary and be affected by liquidity, commissions, and slippage. And you'll get to this recording. And we had the FOMC minutes, and it was like hitting a speed bump. Market barely moved, and it was like watching paint dry. I think all the indexes were like plus or minus 5 points. I mean, it was pretty crazy. Tomorrow, got some jobless claim numbers coming out. We also got the announcement from the OPEC. The non-OPEC members to see if they're going to extend the oil production cuts for another 9 months, so that would be bullish for oil. And I think they're going to extend that, and if they do, that'll help prop up the price of oil. Maybe it could break the 55 or even $60 level if they can do that, because demand will be higher. We got to Memorial Day. People driving to the beach or wherever your favorite vacation spot may be. And so there may be a little action tomorrow. I don't expect a lot. I think starting tomorrow and Friday, the trading volume will be a little bit lighter. And we saw a little bit higher volume today, and it's almost signs of another stalling day. So it seems like this market's getting a little bit tired. But tomorrow after the close, we got some earnings coming out for Costco, Ulta Beauty, and Viva software company. So we'll look at Costco as a potential earnings play today. And so let's take a peek at the market, and then we'll dive into the potential earnings play. And for pretty much most of the day, if you're a Garfield, you didn't miss much. S&P crept up $5.97, ending kind of close to the near its highs at the end of the day, 24.0558. Russell up $1.52. That's maybe part of a Happy Meal. NDX up to 26, almost 27 bucks at 57.30. Trend at 1.2. Tick on the Nasdaq 474, and tick on the New York Stock Exchange at 414. So got a little bit of action after the post FOMC minutes, but almost pretty darn quiet out there. So no changes to our positions, but let's go ahead and get the trade of the day out of the way. And earnings with Costco, like I said, coming out after the market closed tomorrow, and it's been a pretty good rally mode, so to speak. And it's been kind of wiggling around here lately. The IV ranks 36%, so about a plus or minus 4-point move. IV rank may increase as we get toward the market close tomorrow, but using that, and it's pretty liquid. Put a couple 132 flies together, looking at the 170.5, 167.5, and 165. 132 put spread for a nickel, and then the upside, the 175.5, 178, 180.5 for a nickel credit. So if you get both those on, you got a trade on for even. And let's look at the other view we like to look at sometimes. So right now looking at for anywhere from like 169-ish to 177. As far as expect to move, obviously this will contract or expand. Volatility moves around tomorrow, especially toward in the afternoon. But that puts 177 kind of sweet spot. This is using the May 26 option, so this is a 2-day trade. You get $94 positive theta, and then if we kind of drop to the downside in the 169 level, you'll be in a little bit of profit zone here. We're doing 5 contracts, so we got $1,000 at risk at anything below 165 and anything above 179. But for the little volatility that's out there, we try to make maybe make meatloaf or something. I was commenting in the chat rooms, like we need to get some smelling salts out to the market makers to get this market moving. But I think once it starts moving, it could be violent. But that's just my speculation. But that is our potential trade of the day in the Costco. If you like Costco. All right, so I put this in the chat room, but if since you guys are here, in the handout section, I put a screenshot that I put in there. I've got some emails, trade ideas type of thing, but what I think I'm going to start doing is may mix up the categories, but these are stocks with high IV rank. Use them as your dismay, but because I know we're all trying to fish for trades, and with IV being at record lows, it's always good to have some good ideas. And if you got something with a high IV rank or a directional bias, risk reversals would be good candidates for those as well. But and I'll try to mix up this category each night. So if you got a favorite type of stocks that you're looking for, I'll see if I can get a list together. We'll kind of mix this up every night, so we won't have high IV rank every day. We'll have low IV rank or directional or what have you. So that should be in the handout section in your GoToMeeting. You should be able to click it, and you should be able to see that image. So save you a couple steps. So Pete, you were able to get it? Yeah, so make sure it works to. Yep. Okay. Cool. All right. So that is Costco. Let's go back. Look at oil and skew. Like I said, oil moved up just a little bit, ending near its highs, 51.83. Trying to get back to that $55 level, and skew dropping a little bit as well. But volatility-wise, we're continuing to drop. We're down back around $10.02 on the VIX. IV rank, we're at an IV rank of 2 in the SPX, 10 on the Russell, and 15 on the NDX. Either tomorrow or most definitely probably on Friday potentially. I'm most likely going to be looking to put some kind of calendar on, either between the SPX or the Russell. The Russell, obviously, with the news with the OPEC members coming up tomorrow. I'll probably wait till after that news is out, just to get some kind of positive vega in the portfolio. With the IV ranks as low as it is, we might as well take advantage of the low IV rank. We had a nice little winner the last calendar we did in Russell, so knock on wood, we'll try to see if we can do that again. And I got an email from Billy. He was wanting me to look at a stock called Fizz. So let's take a look at Fizz. And he was bullish on this stock and was trying to see if there's any good trade ideas. It's a little bit extended from a weekly standpoint. You're kind of going up on lower volume, and a little bit. That's just my 2 cents. Looks like it's trying to break above this 91.98 level. Today it looks like it made it a little bit. Let's see. Yeah, so it looks like it hit that and then immediately pulled back. So this is 1533. What is it? 333 this afternoon. Then it kind of backed off those levels, and then there's some selling that came in. But he wanted to do something a little bit longer term with it because he liked the stock. I think it could pull back. That's just my nature. I'd like to see something maybe pull back to the 50 potentially. But we'll see what kind of options we got out there to see what we can put together. So 58 days. And let me fire up the grill here with our dashboard. And that's July 21st. So it looks like 5-point strikes. Yeah, I got a mixture in here. Mostly 5 points. All right, so downside expected move by July is around 74 and change. So 132s, I like that. Let's see. Upside looking about 111 or 106, sorry. So let's take this guy. Give us at least a starting point, and then we can kind of tweak it. We could always use more fizz in our drinks. Gin and tonics would be good. Nice little twist of lime. Anyway, turn this guy off. And let's see if we can find 55 cents somewhere. Cents and not the money. We'll use that guy and then compare it against this regular put vertical. But like that don't happen often, yeah. So that gets our upside, right almost the short strike. We got a little downside. Doing 5 contracts, so we got $2,500 risk down below $82. On the upside, you got $5,000 risk. Upside break even of 110, but we're at 92 and change, almost 93 bucks. These are 132. Let's see if we can pull this in. Oops, 110. This is 115. No, 120s. Okay. Yeah, that's a buck. 55 cents. 27.50. I still like that 95. Because you got so much time left to expiration. I mean, that's not half bad. And just let it play out. But so Billy, if you like a bullish trade, this is 55 cents on the call side, 55-cent credit on the down. Um, it is a 132, so a little bit further out, more than I'd like. I'd like just doing regular butterflies. Um, just for giggles, let's just throw in a regular straight vertical spread. Savers. So that's a 90, $1.50. Yeah. So conceivably, you could do 2 contracts, get 975 risk on the downside, and then have to go through your profit zone. Where you got almost 5,000 risk. Or you can leave it at that. I think if you go any further out, this is a 5-point spread. We're getting $1.50, so our risk is $3.50 a spread. I think if we move it down 5 points, we're not going to get rewarded. And it's $1. Eh. And if we sink, then you got 22.75. But if we sit here, you get 225. So I mean, that's another option. But I think I would be more apt to go. Your downside break even's around 84 and change. And if we look at the put, we actually got a lower break even with the 132 put fly. So, and then we kind of just let's just see what that looks like. Because this is a little bit longer term, 58 days. And I apologize, this color is just. So the white one is the blue one, which is pretty easy to see, and the dark purple, which is a little bit tough to see, is the put spread. So you make more money quicker with the butterfly starting here. Short strikes pretty much at the same strike, and then here's your break even on your put spread. If you did 5 contracts at roughly $84, and then your downside break in for the butterfly is a little bit further out. So I'm more apt to go the butterfly route. And if it does move up in your favor, then maybe buy back one of the short verticals on the put side to get some risk off the table. So that would be a potential way to look at it. So that would be fizz with lots of ice, please. Shaken, not stirred. All right, any stocks you guys want to take a peek at? You look at Google. Okay, let's look at Google. It's on a tear. I think it's a contest between this and Amazon. Trying to get to 1,000. And Jesse, you bullish or you bearish? Short-term bull to 1,000, then bearish. Yeah, interesting. Yeah, I mean it is extended. Just we can be careful about that. But if we want to short-term at 1,000, we can see what we can put together. You're going to get 32%. Let's go to the instant replay. And an expiration. We could do June 23rd. It's 30 days out, so I think that's more than ample enough to get to the 1,000 mark in the next 30 days. So let's look at the June 23rds. And would you looky there, June 23rd expiration, expecting the upside, expected move at 998. So, Jesse, you got a good eye, I guess. Let's see. 995, 32 cents. At 14 cents is probably not real. It's probably more 30 cents as well. Get some of the credits. $2 credits. Yeah, let's see what this 260 looks like. Yeah, we're only window shopping. Yeah, it's a little steep there. June 16th, June 9th, 80 cents. We'll come back to that. And let's see if we find some kind of cheap shot to the downside. Downside expected move around 902. $56. 3 cents. 42 cents a penny. It's 32 cents. There's 10 cents. And we can get better yet. Let's see if there's a Venus fly out there. 9 cents. Maybe we can do something. There we go. Cost $1.15, but you get a downside play. It wants to kind of churn up here. You could do that as well. So what I did earlier, now this is about 30 days out. To get 260 credit. You know, it's $9 positive theta. Yeah, it's all right. But if we expect, you know, sometimes if I get, you know, a little bit of a cushion like this, I might, you know, see if I can, you know, reduce the expiration and just see if that gets me a very similar boat, which this I do. I like this a little bit better. And you see we went from a 9 theta to a 20 theta. Still getting a credit, so still getting 80-cent credit on the upside to hit your 1,000 mark, to make a potential 5,000 by June 9th. And we're spending 50 cents for a downside Venus fly, put fly on the downside. So if Google, you know, decides to take a pullback, or we ever get this pullback that, you know, seems like it's been forever, you can have a potential play on the downside. So that's it, and it's only going to cost you 50 cents. So you pocket 30 cents a spread times 5. That gives us $1.50. So we get a $1.50 credit in here, and your upside break evens, you know, right there at 9.95, and that's about where we thought. Now, changing that expiration is also going to change our expected move. So just for giggles here, so we can, so that's the June 9th expiration. Switch it to June 9th just so we can get an easy feel of what that expiration and expected move will do on the upside and downside. Really? Okay, what do I got going here? June 9th. June 9th. Well, there you go. So Thinkorswim must have been in a little delay. So let's 9 ED. So here they're putting the downside expected move by the June 9th expiration is 950, so a little bit closer to at the money, which makes sense. Shorter term to expiration. Upside 1009, so they're expecting a little bit higher on the upside. So again, we changed the expiration, but if you want a little bit more cushion, we can try rolling some of the strikes out. So just roll them up 10 points. So that's we went from 50 at 40 cents to 30 cents. Do you feel the 132 butterfly is easier to adjust if the position goes against you, or is there another favorite? It depends. 132s I like doing underneath 21 days. And we'll probably get more into this tomorrow night as we talk about the weeklies with Amazon and Tesla. We're going to start kind of just putting together what the contingent orders should be, because obviously everything's fine and dandy until the ship takes the wrong direction and you don't have your seatbelt on. But we'll look at different ways. With the 132, I'll typically add another 132 either before the butterfly or after it. And I'll cover that here in a second. But just based upon the expected move, just having a little bit more buffer on the upside cost me a little bit to cut the credit. That was 80 cents and went to 80-cent credit to 50 cents. That's so now we're paying $50, which makes sense because we're down 10 times 5. So it does come at a cost. We give up about half the credit, but you get a little bit more room to the upside. I'm not a big fan of doing it on the call side, but many times when I'm trying to pay for something on the downside, again, it depends on how aggressive or how conservative you are as a trader. If you're more aggressive, you probably would keep these strikes a little bit closer at the money. But if you're concerned about the trade going against you, I'm on the side of caution, or say caution, but more conservative route, and move your butterfly a little further out of the money. It's just for your own, a little bit more ease, I should say, more comfort, being a little bit further out of the money. Now, if it's a little bit closer at the money, you get more credit, which is always a good thing. But if the trade starts going against you, you got to react a little bit quicker to it. But sometimes, the pro is with a little bit more credit. If we had the original 132 here and got 80-cent credit, we got a little bit more money to play for some kind of adjustment if we need it. When we go a little bit further out and we receive a lower credit and you need to adjust, there may not be any credit up here to do an adjustment, because when we run up, in this case scenario on the call side, the vols usually drop, and if you need to buy a butterfly or something on the upside and vols are dropping, that butterfly is going to get more expensive. So it's a little bit of a balancing act. So again, it kind of depends on on your take of where you think the underline's going to go here. So here we gave up 40 cents credit. The downside, since we said, okay, the downside was at 950, and expected moves about 950. So let's move this up. And I'm just going to slide. It's basically going to slide the whole trade up 10 points on both sides. And by doing so, we've now, instead of getting a little credit, we have a small debit. Another way we can counteract that, we can turn the downside into a bionic fly by doing 1-3-2, but lifting a leg. Or you could do a broken wing butterfly, which that's not half bad. That cost us $100. But if we have a little bit of a bias, now see, by lifting that one leg up, that 5 points, it cost us a nickel, but it got rid of a good chunk of risk on the downside. So instead of 7,600 risk, which is a little rich, it's that 5-point move, and we cut 5,000 of risk off on the downside. So I'm a fan of that. Now for the 65 cents, it's like, okay, how can we get that cheaper? Well, instead of going with we all love the big butterflies, but in this low IV, kind of tough. Just shrink your butterfly. So we're going to shrink the butterfly. Easiest way is just move everything in, 5 points and make a smaller butterfly. But I'd like to keep the anchor leg, so to speak. In this case, the 940. I like to keep that. So if I keep that, I'm going to shrink this spread. Which will reduce my max profit, obviously, because right now we're looking at, wouldn't that be beautiful, 12 grand in profit expiration by June 9th. So by making it a little bit smaller, let's pull this in 5 points. And see here, yeah, that's 10 grand of risk. No, thank you. So we get that. There we go. So we got 40-40. Made a little bit smaller butterfly. Instead of 12 grand, we knocked 3 grand roughly out of it. And we got 5,000 of risk down below 910. But now we got the trade on for even. And so we got 5,000 risk on the upside, 5,000 risk on the downside. But we got 30 in positive theta. Remember, we started this exercise, we had a theta of 9. But that was the June 23rd options. So the shorter term options, obviously you can get a little bit more theta. We're using 1-3-2s, and then we're adjusting some of the strikes. You could do the same kind of technique if you're worried about the upside. Just raise the upper leg. Of course, the 107. So that's 85 cents. You get a butterfly up there, but now you got 625 into the trade, so you'd have to kind of experiment with the moving the legs. But that one looks pretty decent. So what do you think, Jesse? You like that one? Oh, okay. Bill's asking about where's the chart. Yep. Let's go to the instant replay. Yep, so there's our 950 to about 1010 roughly. And it's been 1, 2, 3, 4 consecutive up days. Just like this market. Very little selling, so it is definitely bullish in nature. But you never know. They pull back. Could happen at any time. So always be prepared. Can we put this on as a real trade? Sure. This will be, what would this be, trade 50? Trade June 9th. And as usual, we're trying to get a little bit better pricing, and we can always adjust it. And we can get 10%. One thing's 10% off. So in the credits, 10%, about 44 cents. We do try 45 cents. Now, Pete, you're asking about, if it goes against you on the call side. Particularly, and on the call side, I'd like to be aggressive with getting more credit than what I can get. I don't want to, give the market makers a little bit more. Maybe in this case, if you're concerned about the upside, saying, okay, I'll take the upside, but I want 50 cents. So nothing wrong with that. And then, you can watch it throughout the day. But that would be one way, so we can get a little bit more credit out of it. So let's put that guy in. And likewise, instead of 40 cents, take 10% off, would be 36 cents. We'll try 35 cents and see if we can fill. And I will post this in the trade room. This will be trade 50. Yeah, and if we get, because right now would be scratched right now. If we get 50 cents on the call side and 35 cents, that gives us 75 bucks, which would go towards your commissions. So always a good thing. And that's, trying to get some kind of edge in your trades, whatever, whether it be volatility, pricing, that type of thing, execution. Always try to perfect your edge. So we'll leave it at that. And yeah, and like I said, if Thursday or Friday up, that'll be probably what, day 6 tomorrow or day 7 on Friday. I may look to do a calendar. Like I said, either SPX or Russell at this point. 2 IV rank on the SPX is just insane. We've seen it lower, I know, but VIX at the 10 level, just unbelievable. All right, so we'll leave it at that, and if you need anything, shoot me an email, and have a good rest of the day, and we'll be with you tomorrow. Thanks.